Hello everyone, Jesse Webb, Traders Pro. Market conditions still bearish in a bull market. Let's look at direction alerts here, and we're had a pretty, again, another ugly day, down day yesterday, and we'll look at some support levels right here. Really, the kind of the same update as yesterday, other than we are seeing on the breadth indicator, just seeing that one really getting hit pretty hard right here. Momentum's down, breadth is also down. We knew that, but look where these are at. These are at these extreme areas where we're going to get some type of a bounce relatively soon. We also are seeing sentiment holding up. Typically on a real major market bottom, we see this all the way down here to the other side, somewhere clear down here. So we're just not seeing that. So they're actually, even though we're seeing this sell-off, we're not seeing real panic quite yet. Whether we need that or not, it's that'll yet to be determined. But we are certainly at an area where we're seeing some buy-sell. The buy-sell ratio is pretty extended. We did see it tick up a little bit higher than where we're at back in that March sell-off. We look at that chart on the S&P 500, and it was this low right here. Pardon me. So we did see this move here and now here as that was expanding. This was still relatively early in the new uptrend, so there could have been a little bit more fear in terms of, you know, just continuing selling or watching to see if this had more downside. And we're not seeing it as extreme, but pretty close. We're at 0.09. That is definitely at an area where we could be bottoming in the short term. If this is a new downtrend, that'll, you know, we'll see it. We'll run into some resistance areas here shortly. We're also seeing some divergence on the sentiment indicator where we have a new low, we have a low, and then we have a higher low currently if it holds. But price on the S&P 500 is diverging, which means that the price is actually lower. If I zoom this in just a little bit here, so this was the low on sentiment, but now this is the new low on price. So we're seeing price making lower lows, but we're seeing sentiment making higher lows. That's divergence, and that's an additional indication that we can start to watch for in these areas. And we also are, if I go out to this 1 year chart, we talked about this yesterday, this area, this 416. We may continue to slide and get to that level. It's at 421. There's really solid support right there. I'd actually kind of like to see it do that. Just dip down one more time. I'd like to see it sell off aggressively and then see buyers come back in right at that area. Maybe create a little hammer pattern or something, or even if it gaps lower, then we trade higher, creating a piercing bar or something at this area, and then starting to show some confirmation back the other direction. I think we'll see a bounce right there, one way or the other. I think we're going to see a bounce within the next week. Whether it's a counter trend move, sometimes call a dead cat bounce, which I don't know who came up with that term, but it definitely creates a visual picture. But meaning it hits the ground and then bounces up a little bit, but ultimately is dead and ultimately is going to roll over. So you get a bounce and it rolls up and then it rolls back down. That if we see that and things start to move lower, then there's a lot more happening currently in the longer term picture as well. If we take a look at let's look over here at the indexes, and we're still just really, really amazingly low right here, just really low. That could, you know, there's going to be some bargain hunters potentially, depending on their perspective of value, jumping into the market, even just short covering, get some buying, some short covering, get a rally. If you are an aggressive trader and looking for a reversal type bounce, these are the areas to start to do that, to add into some positions right here, or even something a little bit more aggressive for the upside. If we take a look at current sector ETFs, let me get logged in here. We're seeing current sector ETFs on, where was I at here? Login distracted me for just a second. Market ETFs. Let's look at these. Let's look at bonds, because bonds just got obliterated yesterday, and that's going to still be the key here. You see this new low on bonds. We're just really to the downside, 203 on the momentum to the downside. That's just not sustainable either. We looked at, there's an ETF out here that also is a good example. It's actually leading now, is interest rates. Okay, so a massive spike in interest rates yesterday, which means, bonds are going the other direction. This is not a sustainable trend either. Okay, so look where we're at right here. It can go up. Even right here was not sustainable, but we're at an area at this location on bonds that we should see a rally of some kind. It's not sustainable. It doesn't last forever. These are going to be areas that are creating capitulation, throwing participants out of the market, and completing the selling exhaustion. That's ultimately what happens on a downtrend, is selling exhaustion. There's nobody left to sell at some point, and that's going to create some support areas. If we take a look at some current muscle stocks, not a lot in there. Again, this is a good example of just really how awful the market is currently. There are just not very many stocks that are moving up. Most of them are moving down. The handful Taboola, which is an interesting stock because it has held up pretty well, and it's shown up in the scan several different times because you're seeing this, back and forth. It went from hold to buy, back to hold, back to buy, back to hold, back to buy. So but it's not selling off. It's staying above the momentum indicator, in this momentum zone, above that 236, and that's an area that we want to be focusing on still for some of these momentum trades. A couple others here, KNDI. Let me go in this Taboola, KNDI. This is not a bad looking chart. It's retraced back to the 618 off of this current uptrend, and then it's working its way higher. So it could continue to move higher and eventually become a momentum trade. Right now, it's kind of this corrective trade and starting to work its way back up, but certainly interesting for anything to be moving up on a day like yesterday. Is worthy of paying attention to. And then also HSBC, which is a bank stock. I thought banks would have rallied in the last week or so, but it's interest rates still. So if we see bonds rally, I think you'll see banks rally. If you see interest rates come down, I think you see banks and stocks rally. Equities as a whole start to rally. Keep an eye on some of those ideas, and that'll do it for today's update. If you don't have full access to the site and software, there's a link below that you can click and go out and check things out. Thanks very much. Have a great day.